is going to be Betty. Hi, Betty. Welcome to the Dave Ramsey Show.
Hi.
Hi.
How are you today, Dave?
Better than I deserve. How can I help?
Well, I have two questions. One, my first one is your opinion on an HSA.
I love them.
And good. And the second question I have, can you have an HSA as well as other medical insurance?
You don't need them. HSA is tied to medical insurance. Let's talk about it, okay?
Okay.
Regular medical insurance is like major medical insurance out in the open market. Is like a $1,000 deductible 80-20 policy. You pay doctor's visits and that kind of stuff when you're in the real world with me out of your pocket, okay?
Okay.
But only if you go have a major problem, you pay $1,000 out of pocket, then they pay 80%, you pay 20% until it reaches what's called a stop loss. That's standard major medical, all right? Or whatever your deductible is. I'm using an example. The HSA, the health savings account, instead of having a $1,000 deductible health insurance policy, may have a $3,000 or a $5,000 deductible, and many of them pay 100% after that. And tied to that, you're allowed to save tax deductible into a health savings account, a good mutual fund if you're smart, pre-tax money into a health savings account to help you cover that deductible and or other medical expenses. So you can buy any medical expenses out of that health savings account that you want without having to pay taxes. So the government's picking up your tax rate, say 30% out of every one of your medical dollars anyway. You can buy eyeglasses, and that's a medical thing, and that is tax. You know, it comes through that tax deductible account. So the HSA is the way to go if you're healthy. Now, if you have people in the home that have chronic illness, you're going to blow up through that. You're going to constantly be just paying everything up to that $5,000, and you're better off to run with a lower deductible regular insurance policy. But if you're healthy, the health savings account, which is a tax deductible savings account attached to a high deductible health insurance plan, is absolutely incredible. And the reason I was just talking about that, the reason I think that's so powerful from a societal standpoint across our whole culture, is it puts the consumer in charge. You have $5,000 in your hand that you saved, and you're going to go to the hospital. I'm not paying $4 for a Tylenol. I'm going to have a fit with somebody. They bill me $4 for a Tylenol. And I'm not going to pay them 3 times for the same dadgum x-ray because they're inefficient in their billing either. I'll be checking every single line of this billing. And you know what? When people's insurance picks up the whole deal, they don't check everything. Mm-hmm. And so what the HSA does from a macroeconomics standpoint, and it's one of the best things the Bush administration has done. They passed it right under that Medicare bill, boom, right out there, was it makes the consumer make the healthcare industry behave financially. It turns every one of the HSA holders into a consumer watchdog, and you're going to see a change. Because right now the consumer has no reason to hold anybody accountable because the average consumer doesn't pay for anything out of their pocket. And so they charge whatever they want, and the insurance companies get billed whatever for that big charge, and then they go up on the premiums, and then the employer goes, how am I going to pay these premiums? And the consumer goes, oh, well, you mean you're not going to furnish my health insurance anymore? Yeah, because you didn't watch and drove the costs up as a whole. The HSA is going to do away with that. It's a powerful thing. We're going to see it break loose in the next 5 to 10 years. You mark my word.